If you've ever had a cup of instant coffee, microwaved a Hot Pocket, fed a baby Gerber puree, sprinkled Maggi on dinner, poured Perrier over ice, or stocked Purina for your pets, you've probably been paying Nestle. Today we're breaking down how one company quietly shows up at every stage of life, from infancy to hospital care, and why investors still call it a buy and hold classic. This isn't a hit piece or a commercial. It's a clear look at Nestlé's history, the cradle-to-grave strategy, the health criticisms and contradictions, and the fundamentals, revenue, dividends, and why it's still considered a core holding by many. Nestlé started in Switzerland in the 1800s with a milk-based infant formula created to help babies who couldn't breastfeed. From there, it merged, expanded, and over the next century and a half, built one of the largest food and beverage portfolios on the planet. Coffee, Nescafé, Nespresso, culinary staples, Maggi, chocolate and biscuits, Kit Kat outside the US, Toll House, dairy, Carnation, Coffee Mate, water, Perrier, San Pellegrino, frozen meals, Stouffer's, Lean Cuisine, frozen pizza, DiGiorno, Tombstone, Jack's, snacks, Hot Pockets, baby food, Gerber, pet care, Purina, and now vitamins, supplements, and medical nutrition. The pattern you'll notice is simple. When Nestlé wants into a category, it buys a leader, scales it globally, and stays. Cradle to grave, how they monetize every life stage: infancy, formula, and baby food. It starts at the cradle. Nestlé's origin story is infant nutrition, and that lane is still core. Think Gerber purees and cereals, Nan and Cerelac infant nutrition, Nido milk powders, and legacy Wyeth nutrition formulas in some markets. The commercial logic is powerful. Parents are loyal to what works for their baby. Win the trust early, and you've got a household customer for years. Childhood, sweets, milk drinks, and fun foods. As kids grow, the portfolio follows. Chocolate bars and biscuits, e.g., Kit Kat outside the US, chocolate milk mixes like Nesquik, ice cream cones like Drumstick. In many regions, Nestlé is also behind everyday breakfast cereals through joint ventures, so the brand keeps showing up in pantry staples kids recognize. Teens and young adults, convenience rules, school, sports, and late nights. Enter Hot Pockets and frozen pizza brands like DiGiorno, Tombstone, and Jack's. Quick, cheap, tasty, everywhere. Add in Stouffer's and Lean Cuisine for the meal in minutes crowd. This is where the criticism starts. Ultra-processed foods that are high in refined flour, salt, and sugar are convenient, but they're not exactly gut-friendly. Over time, that convenience culture can collide with long-term health. Adulthood, coffee, water, everyday staples. Now you're working, commuting, raising a family. Nestlé's there with Nescafé and Nespresso. It also distributes Starbucks-branded at-home coffee products. Creamer, Coffee Mate, sparkling water, Perrier and San Pellegrino. Baking, Nestlé Toll House, cooking shortcuts, Maggi seasonings and sauces. And don't forget the dog and cat. Purina, Purina One, Pro Plan, Friskies, Fancy Feast, Tidy Cats. One company across a dozen aisles. Supplements and gut health. The pivot to wellness. Here's where it gets interesting. After decades of selling foods that critics say can harm metabolic and gut health, Nestlé has moved heavily into supplements and therapeutics. That includes Garden of Life, organic vitamins, and probiotics, core brands from the Bountiful Company like Nature's Bounty and Solgar, and vital proteins, collagen. It also co-commercializes VOWST, the first FDA-approved fecal microbiota capsule for recurrent C.diff, essentially a microbiome reset after severe gut infection. The irony isn't lost. One portfolio can help create the problem, and another can sell you the solution. Senior years and clinical care, medical nutrition, and tube feeding. At the end of life's arc, when eating is hard or impossible, Nestlé is still at the table through Nestlé Health Science. You'll find specialized medical nutrition and enteral feeding formulas like Peptamen, Isosource, Complete, and Nutren used in hospitals and home care. The same company that met you with baby bottles can meet you again via feeding tubes. Why this works. This cradle-to-grave presence builds lifetime value. Acquire customers early, reinforce with daily staples, add adjacent categories, pets, water, coffee, then expand into health, supplements, and medical nutrition. It's an ecosystem strategy designed to monetize a household across decades. Sugar in early life, infant. The critiques and contradictions. You can't tell this story without the tensions, ultra-processed food, and the microbiome. A big chunk of the portfolio is convenient but highly processed. High sugar, refined starch, and certain additives are linked to microbiome disruption and metabolic issues. Critics argue Nestle helped normalize those patterns globally. Sugar in early life, infant cereals, and toddler milks have been called out for added sugars in various markets, priming sweet preferences early. Nestle has reformulated many products, but the controversy never fully goes away. Water and resources. Bottled water brands, even premium ones, draw scrutiny over groundwater extraction and sustainability. Nestlé has sold some water assets and invested in stewardship, but it remains a hot-button issue. Ethics and marketing. From historic infant formula marketing debates to cocoa supply chain concerns, the brand has carried reputational baggage. Management responses generally emphasize standards, audits, and progress, while activists say the company moves only under pressure. The contradiction is clear. A company that sells indulgence and convenience also sells probiotics, medical nutrition, and microbiome drugs. From a business angle, it's diversification. From a public health angle, it's complicated. The business engine, M&A, scale, and cash. Nestle's playbook is consistent. Buy into categories rather than invent from scratch. Gerber for baby, Purina for pets, Starbucks at home coffee rights, Garden of Life and Nature's Bounty for supplements, and so on. Scale globally with manufacturing, distribution, and retail relationships that smaller brands can't match. Refresh the portfolio. Prune low-return assets. Double down on categories with pricing power. Coffee, pet care, health science. Cash returns, steady dividends, periodic buybacks, and exposure to everyday consumer demand. Revenue runs north of $100 billion a year, with growth skewing to premium coffee, pet nutrition, and health science. It's a classic consumer staples machine. Broad baskets, daily repeat purchases, and margin improvement via scale. Investor take. Why many call it a perennial buy. Defensive moat. People eat, drink, and feed their pets in every economy. That's why staples companies like Nestle are considered defensive. Category leadership. Coffee, pet care, baby, water, culinary, frozen. The brand holds strong share positions across multiple aisles. Dividend record. Nestle has a long, consistent history of paying and raising dividends. For many income investors, it's a sleep-at-night anchor position. Durable strategy. When tastes shift, Nestle buys or builds into the new lane. Plant-based, premium coffee, supplements, microbiome therapies, then scales. Bottom line, you can criticize the health impact of ultra-processed foods and still recognize a world-class operator. Nestle's cradle-to-grave presence is precisely why consumers keep buying, and why investors often treat the stock as a long-term, dividend-compounding core holding.